you know what? Let's just jump right into it. Like, I've seen the transition happening from your portfolio, but then in the business as well. We're starting to see a kind of move towards these developmental stage companies improving. Or we're not, in other words, it's not just the big boys anymore. We're starting to move these developmental stage in terms of M&A. There's a company, Chinook Thera, just got acquired for a huge number, pre-phase 3 or just starting their phase 3 trials. Talk to us a little bit about what's going on. What's this transition about?
Yeah, so what we're seeing is we're seeing pharmas go earlier and take on more risk in their M&A efforts. And so the Chinook deal, ticker KDNY, which was on the tape actually this morning, Novartis is acquiring the company for $3.2 billion in cash up front, $40 a share. That's about a 70% premium to the prior close. And there's a contingent value right as well for another additional $4 based on some later approval milestones, because Chinook has two main programs, Jonathan, as you mentioned, both of which are in a kind of mid to late stage clinical development. The first phase 3 data set isn't expected until the end of the year. And this is an interesting kind of timing for M&A is, to see a big pharma come in before data and take on more risk. I think it's a positive sign for valuations and demand for development stage companies.
And do you think are we going back to it's our end of exclusivity? There's a little bit of desperation from these big companies. Is it financing's more available to them? What do you think some of the contributions are leading to this?
Yeah, I think there's a couple elements. So there's no question the theme of the need for these large companies to augment top and bottom line numbers is never been more acute, and certainly that's true. But I think the FTC challenging the Amgen Horizon merger, which we've discussed previously, has sort of put a shot across the bow, for these big pharmas saying, guys, if you want to make acquisitions, you might get a headache if it's a larger, more complicated deal. But if it's an earlier development stage deal, there really isn't any precedent for FTC scrutiny for a company that hasn't even read out their phase 3 trial yet. So, it could just be that, the farmers are saying, well, there's less competition in terms of bidding for the asset. I'm definitely going to get it in my bag. And, because I'm taking on more risk, FTC is not going to have any scrutiny.
Well, I have to ask because it's June. Is the Fed hiking rates or not hiking rates going to have any impact on what you seem to be pretty optimistic about the M&A speed coming forward in the next few months or years?
Yeah, I think that the terminal Fed funds rate is not going to have a material bearing on the appetite for M&A among the big players in the space. And I don't really think it's going to impact the later stage development companies that are well financed that are moving programs forward. I think at the margin, it can be a negative in terms of cost of capital for earlier stage companies that have, acute capital needs and need to raise near term. I think that segment of the market is going to be challenged. But, for these later stage assets, Jonathan, these M&A deals are going to happen whether the terminal Fed funds rates is 550 bips, 525 bips, or 600 bips.
Sure, moving forward. Well, you mentioned Novartis, which household name, giant company. Is it just big companies buying little teeny ones because of this FTC, favoritism towards a small company or less scrutiny, or are we seeing it anyplace else? Are there small companies merging, mid-cap companies merging?
Yeah, so we actually are seeing, companies down cap getting involved in M&A. So there was an interesting transaction a couple of weeks ago. Ironwood Pharmaceuticals is sort of a, $2 billion-ish market cap company, is acquiring a pre-phase 3 clinical development company called Vectiv. Very interesting deal, Jonathan. So it was more than $1 billion acquisition price. So, it's not quite a combination of equals, but they're both in sort of the same ballpark in terms of, market cap size. But the combination is really highly synergistic, and it sort of gives Ironwood has an approved drug, Linzess, in the gastrointestinal space, and Vectiv's program, should the phase 3 data read out favorably, which will be towards the end of the year, would be very complementary. So you could just drop it into the bag. You already have the existing sales force and commercial infrastructure. It's a very interesting deal, and I think it's one that is worth paying attention to.
Are we going to see a lot more of these? Is this an outlier, or is this something you expect to see more in this coming M&A wave that you've been thinking about?
Yeah, I think you're going to see, combinations that are highly strategic. You're going to see them happening, and this was I think a good example of one that has good potential to create value for both parties, and that's
Yeah.
really what you want to see. And I think that we're very bullish on the potential for uptick in M&A through the end of the year. We're going to see more deals, and we're going to see more of this flavor as well.
Gotcha. Do you have any insight, like why now for this particular transaction? I'm obviously it's been in the work for a while, but is there a reason? Is there some sort of attribute right at this time that seems to make it so fortuitous for them?
Yeah, I think for Ironwood, getting in before the phase 3 data gave them a chance to get it
Mm,
done, right? Because I think after this data comes out, Vective's developing a drug for short bowel syndrome that could be potentially differentiated from the market-leading franchise. So, with the phase 3 data in hand, the asset is probably going to be priced more than Ironwood would, and probably be prohibitive to do a deal. So, in some ways, stepping in front of the data, yes, they're taking on some risk in terms of the readout, but enable them to get it done. So I think we're going to see this interesting dynamic. And Jonathan, I think it speaks to the competitiveness of the M&A landscape currently, right? The high quality assets, there's more than one bidder. And if you're a mid-stage player and perhaps you're not going to be able to, outbid everybody, maybe you have to go earlier.
yeah, well, that sounds interesting from an investment perspective. Absolutely. Stay away from the buy everything and equally weight them, right? You can be a little more aggressive on your stock picking. Well, let's just jump into the big one. Merck is suing Health and Human Services. I think they're suing Medicaid and Medicare as well regarding, well, what you and I would call price controls. I'm sure there's some euphemism they're using in there, but tell us about this. What's going on with that? That seems like huge news, but you really have to look for it to find it. What's going on?
Yeah, I think we've all been expecting, at least specialists that invest in the pharmaceutical space have been expecting challenges to the quote unquote Inflation Reduction Act, right? This was the legislation that was passed that includes these, they call them drug price negotiation provisions. They're nothing more than price controls and really setting price and capping price
Yeah.
for Medicaid and Medicaid services based prescription drugs. And Merck is the first one out. So I think that we expect, and step out and let's look at the big picture for a second. I think we expect to see, multiple different litigations attacking multiple different angles of this legislation, Jonathan, from multiple parties. So Merck is out first. They're trying to come at it from an angle of, they're not being fairly compensated for, the value of their medicines that are being, essentially taken
Mm.
and given at reduced cost. And then, the second sort of thrust of their argument is that, they're being forced to affirm that this is happening, and sort of that's a First Amendment violation, and there's some nuances to the legal argument, but that's the gist of it,
Yeah.
right?
Yeah.
We expect to see multiple different legislations to come from different angles, really, anything from procedural grounds to sort of jurisdictional things. I mean, there's quite a big list. So I would expect in aggregate there to be, let's go 6 months forward from now, there's going to be multiple lawsuits ongoing to try to challenge this
Yeah.
legislation.
Oh, this could be interesting, though. I mean, what are they going to do? Unenforce the laws they passed? Are they going to repeal laws? I mean, and that surely has some impact on other entities in here that are going to be impacted by this. Does the outcome of a Merck lawsuit or legislation impact your views on the M&A kind of environment going forward?
Yeah, so I think that maybe there's two pieces. I think there's no question that the Inflation Reduction Act, some call it the Innovation Reduction Act. I've written about this a little bit. There's no question that incentivizes these large companies to do more M&A deals. They need to, right? Their large franchises are under threat earlier than they expected, and they're going to have to augment top and bottom lines. But
Mhm.
I think in addition to that, I think what what the litigation does is it challenges the legislation, at least gives investors hope that there could be some favorable changes. So look, it's the law of the land. It's what was passed. Now, it's being implemented now, Jonathan, and there's still some room for interpretation in the implementation. So, I think that there's a fair chance for in aggregate this litigation effort to move the needle to some level. So I think that maybe it's an incremental positive, maybe it's more substantial than that. I think it remains to be seen, but the fact that it's ongoing, it at least gives investors something to look at in terms of how to mediate some of the, the impacts from these, price controls.
Sure, creates opportunity, and that's what investors want an opportunity. Well, Mark, this has been great. As always, thanks so much for your time. It's been a good quarter. Biotech, the index at least, the last year has been tremendous. I think there's been a little bit of a pullback the last couple of weeks or so, but the 1 year number for the S&P Biotech Select Index is 20 some percent. That's great, right? That's pretty exciting. So let's hope it
Yeah, I think.
stays.
Look, I think folks are hoping that the bottom is in for the sector. Maybe that's not true for some of those folks that are holding expensive FANG stocks. Look out below, and you can't do
Yeah.
the math. But in our sector, look, we've had a strong base forming. It's been the longest and deepest pullback in the history of this sub-index, and we're seeing M&A pick up. We're seeing signs of life. We're seeing good operational progress across a large number of these companies. So we're getting optimistic, and I think that the risk in biotech is to the upside, not the downside.
Awesome. Well, thanks again. Go enjoy the breeze after the market close today. Hope you can do some kite surfing. Although be careful, we need your body in good shape there. So maybe you should stick to volleyball, Mark. Stick to volleyball.
Yeah, I'll stay on the sand, but
Stay
thanks
in the same.
everybody. Good to see you.
Thanks. See you, Mark. Have a great day.